Today is April 11, 12:55 p.m. We saw some unusual options on United Airlines and wanted everybody to know about it and also to be careful with it because it could possibly be another strategy that's actually the opposite of what it looks like. So before we get right into it, you notice here that United rallied today 2%, and we are at this strong resistance level here today. This is the candle today. You'll see here this $44 level here has been quite a strong resistance ever since it has dropped back here, and so will it break this level? That is the question. And these unusual options are actually also telling us that that's kind of sentiment because the strategy that was used on these unusual options, you'll see here at 11:05 a.m., you'll see here these 1,500 43 strike puts in April 21, and then selling the May 44 puts, and that's for 1,000 contracts, so it's not equal amounts. So keep that in mind. So this could be a back ratio strategy. So let's take a look deeper into this. So on these options, that was April 21, the one with the 1,500, you'll see here at the 43 strikes here. So you'll see this here where there was buying 1,500 of them. So keep in mind that the volume is actually less than the open interest here. So it's possible that it is a closing order. So let's sort of analyze this together, assuming that it is all open orders, right? So let's say there was 1,500 of them, which is that they bought, and then they had sold the May 19th. You'll see here, this is their position here at the 44 strikes, the 1,000 44 strike puts. These are opening orders because they are open. They're higher in quantity than the open interest, you'll see. So let's say they sold their 1,000 of them, okay? And then let's analyze this trade. So you'll see here, now that we have it here, that this is the back ratio. Let's open that, and it will profit if it goes down in price. So the current price is 44.04, and so it has to, by expiration, it has to break $40.85 by the expiration for it to be profitable. And however, if it does rally and rally past $48 here, you'll see that they are also going to be profitable. So $48, if it breaks $48, and if it drops below $40.80, they'll be profitable. As long as they don't stay in this range, this is kind of known as the death valley in back ratio spreads, they will not be at a loss. And so if we look at the charts, and look at where 48 is all the way up here, right? So it would have to break this resistance, not only break this, but also break the 48 by expiration date. And if it does have a very strong rally and break that, which is possible since these are gaps here that are a lot easier to break than the when there's no gaps. So these are gaps on these price levels. Or if it drops below 40, which is this resistance here, you see this is all the way down here. Yep, the 40 here. This is right here, 40. This last price mark here where it bounced was 40.4. So this is another support level here. Okay, so they're thinking like if these support levels break drastically, they will be profitable. Okay, so that's what it looks like. However, because we have that April 21, because this volume here is less than the open interest, it's also possible that they originally sold the 43 puts and they're just now buying it back and closing that order, right? And once they close that order, they rolled it further out in date and sold the 44 puts. Okay, 38 days. They extended their 10 days to 38 days to continue selling these puts at this strike price, at its current strike price at 44, where they can collect the most amount of credit because it is at the money with the highest extrinsic value here. You'll see here. Okay, so that's another possibility. And so if they were just to sell this if they close those orders and sold this, that would mean that just selling one of these, this is a moderately bullish bet, that it will stay above 44 and stay above 44. And as long as it stays above 44, they will be profitable. And as long as it just does not drop below 41.68, they will stay profitable because this is their break even for that. So 41.41 is also here. This is the other support here. So that's the other possibility that these unusual options could be telling us. So we want to make sure we know where this stands tomorrow. When we look at we'll check back again, look at the volume, compare the volume with the open interest for this 43 strike puts and see where is the numbers. Is the open interest going to be, is this volume going to add to this open interest, or will it subtract from this 4,300? Then we will know whether or not this was an opening order or a closing order. Okay, so that's how you could figure that out. Just be patient, wait a day, and we'll find out whether or not this is was this a back ratio strategy, or was this selling a bullish put strategy. Okay, so all right, if you found value and learned something in this video, please comment and like this video, and so that will help us make more videos. And subscribe and hit the bell icon, and you'll be notified whenever we see these unusual options. All right, and take care and good luck. Keep in mind, United has earnings. It will be reporting earnings after market on April 18. Okay, all right, take care.